Welcome to the Mango Grove. Now, this is a quick excerpt from Sean's most recent live stream. This is a lesson on breakouts and how breakouts should be allowed to break back into the range without you getting spooked out. Now, here is a quick lesson on how do you go about handling such cases of breakouts.
Oh, right. This one's really important. This one's really important. By the way, do you guys see this over here? Do you guys see this over here? I talked about something, right? What did I talk about in the beginning of the stream? There's my drawing tools right here. I talked about how you can say, hey, high, low, right? So high, low, right? Look for the structure, and then you draw dotted lines, right? And you go, okay, cool. You just join the dots, right? Market needs to move like this, and as long as we are doing this, we are fine, right? You have that right here. You have a high. You have a low, 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 right? So you kind of have an uptrend here, guys. I mean, not kind of. You do have an uptrend over here on the 2-day. So, is this structure bearish or bullish? The structure is actually bullish until it breaks the structure, right? And then you can say, oh, hey, this is a falling channel, right? Or sorry, rising channel that broke trend, and now it's bearish. So your rising channels are only bearish when you break the trend. Okay, just again, this was a good example of what we talked about in the beginning, but there's something else I want to talk about over here, which is something we've been talking about in seed for the entire cycle. I've been using this as my trading, I don't want to say strategy, but a rule. Okay, I've been saying this over and over again. You can see the date over here, 07/29/2024. But I've been saying this all year. Above the chart over here, it says, remember guys, you should always remember that for this entire cycle, breakouts should be allowed to break into the range. Okay, breakouts should be allowed to break into range. Why was I saying that? Because across charts, across assets, okay, breakouts have been breaking out, okay, and then breaking back into range and then continuing. And if you have been a breakout trader, trading this in a support and resistance way where you played the SNR flip, where, oh, I flipped resistance, I'm going to play SNR. Well, you just end up being liquidity. Price comes in to put a high low within the range, and then we break out again, right? So I totally get saying, you know what, I want to break out, I want to buy the breakout over here. I want to buy the breakout over here because I think price could continue and I don't want to miss out. That is fine, but you must allow for price to break back into the range as long as it's holding trend. Okay, so you should say, okay, I'm going to buy this breakout, but I need to be okay with price coming all the way down over here before I am wrong on my trade. And if you are not okay buying over here and allowing price to get all the way down over here, do not enter the trade. Do not enter the trade. Just wait for price to break back into the range and buy somewhere close to your invalidation, because you are not wrong on this breakout trade until price breaks down under here, right? In fact, you could say, hey, under here, this is my invalidation. I'm going to allow for a wick over here, because many of you who aren't in seed, you guys may place your stop loss over here, which you shouldn't do. But let's say you do, you should not do that. You should be saying my invalidation is all the way over here. So that would force you to put your stop loss somewhere around here, and then you will allow for price to go like this, and like this, right? So again, if you are playing breakouts of patterns, you must allow for the pattern to break back into the range before continuing, provided that it holds the trend. Okay, this is why I keep saying breakouts should be allowed to break back into the range. And again over here, guys, you should allow Bitcoin to break back into the range if you are buying at around 63K. And the reason you're buying at 63K, which you shouldn't have been, by the way, is because you are not in position, and the risk of not being in position is greater than allowing for price to come back down. That is completely fine. Remember, it is completely fine. Write this down. It is completely fine to buy a breakout, provided that the risk of price going up is more than the reward of waiting for price to come down. Okay? So some of you who could not risk losing Bitcoin position in case we did something like this, right, may have been buying over here, right? But think about this. If you have market knowledge, you have market structure knowledge, and you have this backing of confidence, telling yourself that, you know what, I'm going to buy here, and I know that price can come down, I know the price can come down and I should be okay with that, but I'm making a conscious decision to do so. If you are able to tell yourself that, and then you buy and the price comes down over here, like it did, you wouldn't be psychologically distraught like many people are, right? People are distraught because they bought over there and price did not continue. And they're like, oh my God, this sucks. It sucks because you don't have market knowledge of structure and how it will be okay if it does come down. And you bought there knowing that it could come down, and that is the risk you took, and it's fine. It's fine. That, knowing that it's fine gives you appeasement, saying, you know what, yeah, this sucks, but I'm being mango. I'm being mango on this, right? So, if, for example, you're already in position, you're already very well in position, there was no reason to buy over here, right? There's no reason to go leverage over there. To be honest, there is an argument to be saying, you know what, I want to put on some leverage trades over there. But let's say you are trading it simply based on this time frame right over here. You can see that there's clearly a breakdown point right over there, guys. Okay, inflection point, breakdown point, and you only want to wait for price to clear above there. Maybe put in a high low somewhere around here and then continue, right? Because these inflection points have been getting respected over and over again. It's the same story here, guys. Where's my, okay. Same story over here, right? We had this inflection point, big down point, where price, I'm fumbling with my tools today, break down, right? And this inflection point could be drawn. You can see that we came up there, tested it, put an M-like formation over here, broke down over here. So, well, now you take this level by level or structure by structure, and you can see that this inflection point got tested next. This breakdown point got tested next. Tested there, broke down, and now we have this breakdown point that price needs to claim before we can say we are going to go into an uptrend, right? So you can use the inflection points as opposed to using the highs to get a heads up on your uptrend actually continuing. So now if we do this and we actually break out over here, that's going to be really, really bullish. So your key zone to look at is 65K. Then once you claim that, you start looking at all your previous inflection points. So you can go like this, boom. Be like, okay, this was my big time point. I need price to claim this level, and then this was my big time point. I need price to claim this level, and you can start adding to your positions before most other traders will be adding only on the break of the highs. All right, I think that's it, guys. I'm done.